It is Tuesday, which means it's time for another tutorial. And today I am very excited because I'm finally going to do the thing I've been promising to do for so long, which is go full degen mode on Anchor Protocol. And why have I waited so long? Well, the market was just too hot. I didn't think it was the right moment to do so, but now it is. So today what we're going to do is we're going to use the borrow side of Anchor, then plug that into the earn side of Anchor, and maybe look at LPing as well. I'm not sure. And then we're going to track the whole thing. And over the course of the next couple of months, we'll see how we do. Because my thesis is that playing the borrow side of the market and using that to plug into the earn side of the market could be a really profitable strategy. And I'm looking at ways of playing DeFi and particularly playing Anchor, Terra, Mirror, all of that ecosystem during a downturn in the market, during the bear market, which we know is coming at some point. So just bear with me as we get into some sponsors messages, which are coming up right now. Don't let high gas costs keep you out of Ethereum. A balancer you can trade all you want and get most of the gas costs back in your pocket. In their new BAL for Gas campaign, traders are receiving 6 figures worth of BAL tokens every week. And with version 2, Balancer is becoming the one-stop shop for DeFi liquidity. Balancer version 2 brings stable pools and weighted pools tightly integrated under a single protocol, flash loans, lending via asset managers, and much more. Check it out at balancer.finance. We all know the feeling of paying high fees and waiting for transactions to confirm when interacting with DeFi. Well, no more. Solana has built a fast, censorship-resistant blockchain where you can build and use crypto apps that scale today. The network supports thousands of transactions per second with fees less than a cent and over 500 validators. To learn more, head over to solana.com/Defiant to get started building and join this rapidly expanding community. Now, do you remember your first DeFi transaction? After juggling 5 or more tabs on your browser, you gaze at that Etherscan confirmation feeling like you just contributed to the future of finance. Except you got quickly lost in a world of gas prices, vaults, pools, hard forks, degens, and sushi chefs. Fortunately, Zerion got you covered. They built the dream tool for managing your portfolio. You can track all your token balances across wallets and chains, access every kind of DeFi asset, including indexes, pools, and yield strategies, and trade at the cheapest rates with no extra fees. And that is because Zerion sources liquidity from every decentralized exchange like Uniswap, 0x, and 1inch. There's no sign-up required, no fees, and a blissfully easy UI. Simply connect your wallet at app.zerion.io. Now let's get back to the tutorial. So I've been talking almost to boredom about Anchor Protocol. It's just the one that makes the most sense to me for normal users. And there's a couple of reasons why this is. Firstly, it's super easy to understand and it's super simple. I like the user interface. Sometimes when you jump on these farms and different dexes, it can be so overwhelming to try and wrap your head around what's going on. But Anchor is not like that. In many ways, it kind of mirrors the way Uniswap simplified the trading experience down to just the pairs that you want. Anchor is it feels like a very similar kind of thing. It's designed for normal users, people without extensive DeFi knowledge, and that is why I like it. But I've also just been fascinated by not the earn side of the market, which was how I got into it in the first place, but the borrow side. Because as I looked into it further, it always felt like the borrow side was going to offer more opportunity than the earn side if you had the balls to take that side of the market. And today, we're going to grow those balls, we're going to use those balls, and I'm going to stop saying balls. Promise. So the first thing that we're going to need, well, there's a few things we're going to need, but this is what we're primarily going to need. We're going to need the Terrastation or the Terra browser extension. Here it is. So you need to have a Terra wallet to allow you to use Terra assets to interact with Anchor. Now, we covered this in a previous tutorial, but if you install this browser extension, I'll leave a link in the description below, then you'll be able to set up a wallet and you'll be able to get started. The other thing we're going to need for this tutorial is some Luna. Now, I have covered how you might go about getting UST and Luna completely decentralized, but I have to be honest, I bought my Luna yesterday in preparation for this, and I bought it on Binance, like a centralized exchange. Now, why would I do that? Well, I just didn't have any time, is the honest truth. I needed to do it fast, and I also just kind of, if I rack up how many dollars I've spent on transaction fees and tutorials over the last 6 months, it's not pretty. So I went on Binance and I bought some Luna. And it's quite interesting looking at the Binance chart, actually, because you can see what happened in the last week or so. This huge green spike in the volume here, representing a sudden inrush of capital ready to buy that dip. And where did we end up? We ended up around... Wow, it snuck beneath $4 a token for Luna. And you can see up here it was around $22. It's quite interesting looking at the Luna price chart, actually, because you can see just what a massive effect this sudden dip had on it. And of course, when we're looking at the borrow side of Anchor, the collateral for Anchor is Luna. So if this happens, then people get liquidated. And that is exactly what happened. There is a tweet storm from Do Kwan, which I'll also link in the description below, where he goes through everything that's happened, because he got a lot of hate from people who had, I guess, lost money or felt like they had lost money during the dip, not understanding that this was a market-wide dip. And he tried to explain what had happened and how resilient the protocol had been under stress. And now if we look at the Anchor side, I mean, I look at this every day, but we look at the earn side, which is the one that most people will be interested in. We're supposed to be tracking towards 20%. It's now at 17.88%. And there are two ways to look at this, one of which is it cannot hold its 20% target rate, or it should be at 20%. So the difference between where it is now and where it should be offers an opportunity on the borrow side to make some money. My phone is beeping at me. Let's turn that off. That's how I look at it anyway. I look at this as go, okay, fine. The interest rate is down. It's still a pretty good interest rate, but the borrow side is going to be heavily incentivized to help push that interest rate back up. Now, you might be wondering how on earth all of this works. Well, if you are interested in that, up here you'll see a little thing. If you click on that on the docs, it takes you to their Gitbook. Now, every project generally has a Gitbook, and it's a beautifully designed piece of software that allows you to set up exactly what you might need to interact with the protocol. And in this case, we can find out exactly how the money market actually works. Because essentially all this is a money market. You have borrowers and lenders, and everyone's incentivized to keep the thing liquid, to keep it moving, and to keep it functioning as it should. And the one we're particularly interested in is the ANC token, and we'll get into why that is in a second. But if you go into the ANC token tab, it will explain to you exactly how ANC gains value and how they're able to give you more ANC tokens as more borrowers come into the system. It is a flywheel. Everything's generating rewards to fuel other rewards, which could be a worry. But it's, as it's put under more and more stress, we see how it can work. So let's just get straight into it. So I have my Terrastation wallet. Oh yeah, I was just going to talk about the Terra bridge. If you wanted to move assets, for instance, if you had USDC or USDT on Ethereum and you bought UST on Uniswap, which you can do, then there is a bridge to move that UST onto Terra. It is bridge.terra.money, and here you can send assets from the Terra side to the Ethereum side and back the other way. But also there is a bridge built into the Terrastation wallet itself. So let's say I wanted to send UST and I clicked on that. I can send it from the Terra network to a Terra address, but I can also send it to the Ethereum address. So I can switch chains here. I can pick Terra, Ethereum, Binance Smart Chain. So it's a nice interchain asset that allows you to switch between those three chains very easily. And I know a lot of people have been using Binance Smart Chain and might have assets there. And it should be very quick and straightforward to send assets from BSC to Terra. The problems come when you're interacting with Ethereum. It's not so bad today, but in the last week or so, there have been moments when it's been pretty horrendous. So enough preamble, let's get straight into it. So we want to go to the borrow side of the market, and down here you will see collateral list, and it says B Luna, bonded Luna. So we will need some Luna, well, bonded Luna, in order to be able to take out a loan. And at the moment, we don't have any. So we need to go to the bond tab. Now in the bond tab, we can then bond Luna and mint B Luna. So bLuna is an asset that represents Luna, pretty much one-to-one, although it does vary around depending on what's going on to do with slashing. That is too much to get into, but if you want more information on how that will affect your Luna deposit, you can look again in the documentation and it will explain that. I do highly recommend reading all through it because firstly, it's very simply written. There's not a lot of text there. Some projects have huge Git books. This doesn't. It's very simple to understand, but it's very important to understand how things might move around and might vary. So what I'm going to do now is I'm going to just click on the entire balance and bond the entire thing. Next, you're going to be asked to select a validator. Now, why would you be asked to select a validator? Well, on any staking protocol, there are validators who are probably more reliable and more consistent than other validators because they might be running validators on lots of different chains and they have a very good track record in uptime, for instance. And so if you're acting as a validator on a proof of stake network, you're incentivized to keep running your nodes as close to 100% uptime as you can manage. It's not always possible to do that, but if you don't, then your rewards are slashed. There is a penalty for not performing your duties correctly, and it can be quite severe. So for this process, there are a few whitelisted validators. So these are, there's hardly any here. There's like 10 or something. So these are the validators that Terra believes are the most trustworthy, have the best track record, and are the least likely to be slashed. Because if a validator is slashed, then it affects the overall system and it affects the overall rewards, which they do not want. So I remember Chorus One, because Chorus One were also validators on Harmony. So I'm going to pick them. All of these validators are whitelisted, and it doesn't really matter which one, but you can do your homework and figure out which one is the right one for you. So now I'm going to mint. Let's just check in on the transaction fee. It's 25 UST, so it's 25 cents. So it's not dirt cheap. It's not like sub-penny transaction fees, but it's still not a great deal. So I'm going to go ahead and mint that now. And it's going to ask me to put in my password. So exactly as you would with a MetaMask transaction, shouldn't take too long to do that. And there we go. So now we have bonded 343 Luna and minted 343 bLuna. There we go. Everything is good. Now, I just want to flag up that my starting position here is going to be around about $2,000. It sort of goes up and down a little bit. The price of Luna was $6, and I'm actually tracking all of this in a spreadsheet. So I'm going to make the spreadsheet available for everyone to see, and we'll do a snapshot once a week. It's not going to be that precise, but what we want to see is how well this strategy performs. So you'll be able to see all of that. And the reason I wanted to do it now actually as well is because if Luna is the collateral for the loan, you want to be picking up Luna when it's cheap, not when it's expensive. Because if the price of Luna goes up, then it doesn't affect your collateral. But if the price of Luna goes down, then you could become at risk of being liquidated, and nobody wants that. So that's why now is the right moment to jump in and start to do this. All right, so now we have minted, we have our bonded Luna. We are ready to borrow. There we go. So if we look at the net APR now, it's 166%. Actually, yesterday when I looked, it went up as high as 230%. So what we want to look at here is on the earn side of the market, the interest is 17.88%. But on the borrow side of the market, the APR is 13%. So it's lower than the other side of the market. So everything's favorable. But we also have this distribution APR, which is 180%. Now, what does this mean? So if you go into the borrower side of the web app, what's happening here is borrowers are being incentivized to borrow by being distributed ANC tokens on top of the loan that they take out. And this ANC is being automatically purchased off the market by deposits into the yield reserve and from profits from the protocol itself. But yeah, so you are being heavily incentivized to borrow from the market by being given these A and C tokens. So what I'm going to do now is provide bLuno. So we go down here, I'm going to deposit the maximum I can. Now, if you remember, I said I'd set a starting point as $2,000. It was around about 2,060, something like that. So I can provide this collateral, and my borrow limit will be 1,023 UST. So it's around about 50%. So the collateralization ratio is about 150%. So I'm going to, oh, I messed that up. Something went wrong. Let's try that again. Probably put my password in wrong. Okay, there we go. So I've submitted the transaction to provide bLuno to the contract. And I still haven't taken out a loan yet. So now my collateral is in. So you can see here the value of the collateral, 2,055. This is the sum of all collaterals deposited by the user in USD. In the future, there'll be more collaterals that you can add. At the moment, it's bonded Luna, but there will be other ones. Don't know what those will be yet, but I'm imagining they will be things like Solana, bonded Solana, or bonded DOT, I think might be on the cards. So there we go. So now, if I click on borrow again, I can move the slider up, move the slider up, move the slider up, and here we go. So now I've hit this safe LTV limit. So basically, I can borrow all the way up to here. So that's the max I can borrow. But any movement in the price of Luna will result in part of my loan being liquidated. So you want to stay on the safe side of things. So I'm going to push it all the way up to the limit because the promise of this tutorial was full degenerate. So now you can see how heavy the penalty for over-collateralization actually is. So we started out with $2,063, and I can only borrow, really, safely, $718. But that is what we're going to do. Now, bear in mind, I am testing this strategy out at the moment. That's why I'm not putting in a huge amount. But if I were really going in hard on this for reals, let's say the market really picks up and I'm sitting on a ton of cash at the end of the summer or whenever we think the bull market's going to end, then I will want to know what this looks like. And that's why I'm testing it with a relatively smaller amount. Okay, so once again, going to submit that transaction. And as you can see on Terra, everything works pretty fast. It's not prohibitively slow. There you go. So that was a 1.691 UST transaction fee. So I think at the moment, I probably spent about $2 doing all of this. Again, not nothing, but not that bad. So now, I have a collateral value of $2,064. I have borrowed $718. And my net APR on all of this is 166.92. Perfect. So now my options are thus. I can now take what I have borrowed and deposit it into the earn side. Ooh. See, that's the fun part of this. So I can now deposit the UST that I got into the earn side and start earning that 17.88% interest on the amount that I borrowed. But there's another thing I can do, which exists on the govern side of the tab. So on the govern side of the tab, you will see the APR for Anchor and for the Anchor UST liquidity pool. And you'll also see a little kind of, what's the word? A table here. That's the word I'm looking for. A table here to show you kind of what's going on. So ANC is the governance token of Anchor. And this is the token that we're going to be earning for borrowing. So it's too soon to be claiming rewards. But at this point, we can. There you go. You can see my total reward already is 0.000855 ANC. So basically what I want to be doing now is I want to start staking my ANC, because by staking ANC, I also get a 6.75% APR on that as well. Now, I'm not going to do that straight away. I love this when this happens. You can see it's automatically going up, already starting to earn money on the money market. So now my borrow position will start earning ANC, and at some point I'm going to claim it and start staking it. And I think a portion of excess interest in bAsset staking rewards are automatically distributed to ANC stakers. I can also start automatically restaking as well. So I'm going to also start staking my ANC. And I guess if I look at the charts right now, if I were to make a kind of rough guess, if we look at ANC, let's look at a bit larger time frame. This is what the ANC chart looks like right now. And I think for a lot of people, that would be terrifying. You know, it's gone up like this, nice and steady, 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 reached the top of $6.48, and then just fallen off a cliff. And that would be very scary. But for me, that's not that scary. That means there's probably more upside on this. I think almost definitely there's more upside on this than there is downside. So I'm quite happy to kind of sit on an ANC position, let it rack up, and start earning that interest. So now the final piece of this puzzle is to use the money that we earned, that we borrowed, and then deposit it back into the earn side of the money market. So I'm now going to deposit all of it in there, and I'll tell you why in a second. So now I've deposited that borrowed UST into the earn side of the market to try and take advantage of that 17.88% APY. So now I can look at the weekly interest on that. It's not huge, it's $2.50 a week. But obviously, if you take out a loan, at some point, I'm going to have to pay back that loan. And so what I want to do is I want to use the interest from this borrow side, from this earn side, to do some of the work of paying back the loan. It won't do all of the work, but it'll do some of the work. And let's say I set myself like a 12-month time frame. You know, I will be able to pay back $133 over the course of a year just by depositing what I took out. But I'm also, because I'm borrowing, earning the ANC token and earning interest on that. So I get the value of that token going up, appreciating, but I also get staking rewards for having that token and staking it on the governed side of the token. So I'm basically, from one Luna deposit, bonding Luna, then taking out a loan through UST, then depositing that UST into the earn side of the money market, then taking the ANC rewards that I get, staking them for the 6.75%. That all adds up to, hopefully, a profitable position. And don't forget, on top of all of this, the Luna token can also appreciate in value. Of course, it can also depreciate in value, but hopefully you do this to the extent that it can make sense as a profitable venture. Now, when we talk about borrowing, people often say, well, you can leverage your assets and get some liquidity from them straight away and do whatever you want with them, but you can also just plug them straight back into the money market that you're working within. And that is exactly what we're doing here. So I'm effectively using leverage to play this money market, but it doesn't feel scary. And I don't think that I'm in any danger of getting liquidated. But of course, had we been doing this tutorial, let's say, at the beginning of the month, I would probably have been screwed. So something to bear in mind. As always, when you're taking out a loan and you're at risk of being liquidated, then yeah, you've got to keep an eye on things. But for me, this is going to play probably one piece of my strategy if we move into a bear market, really looking to take advantage of what I think will be a diminishing side of the earn side of the market. Because I guess my thesis is this, that when the market starts to really turn down, people will flee to safety, and they will most likely flee to the earn side of this money market for safety. So I will be looking to actively look at this borrow side, which will be heavily incentivized to get us to get back to that 20% or whatever the target rate is at that point in time. So I hope that was useful. I'm pretty heavily kind of leveraged into this, but the whole idea was to do a degenerate tutorial. There is, of course, the other thing which we didn't talk about, which was LPing. So we're going on here to the govern side. You've got this LP, this liquidity pool here for ANC and UST. So I could have taken the UST that we borrowed and put 50% of it into ANC immediately, buying that on Terraswap, for instance. And then I could take those two tokens and drop them into the liquidity pool, which is now paying 73.31%. But I was a little bit worried about doing that just because if we look where the ANC token is right now, my instinct is that it's going to go flying up again, and that will incur quite a lot of impermanent loss, which I don't really want to do. So that's why I didn't do that. But you could be perfectly within your rights to do that. If the market was going sideways, might be a good thing to do. So that's hopefully a useful and valuable way of looking at Anchor. I've been promising to do this for a long time. Now I have. And like I said, I will track all these positions on the spreadsheet, and you'll be able to see once a week how we're doing. Hope that was useful. See you on the next one. Peace.